Hello everyone, welcome back. Today we are solving 2025 February March paper 12 and this is the first part of this video, so we'll solve from question number 1 to 10. So let's get started. Question number 1. Which statement explains the realization concept? Number A business recognizes sales revenue when it delivers the goods to the credit customer. B. A business recognizes sales revenue when it receives an order from a credit customer. C. A business recognizes sales revenue when it receives cash from credit customer. And D. A business recognizes sales revenue when the customer sells the goods onward. Okay, so concept of realization is we need to record the transaction as soon as you realize it. That means here in this case, if I sell the product to the customer, then I would say that my sales has been achieved. So the correct option for this answer is option A. Okay, because here we are selling goods to the customer and we are giving them goods, we are delivered them, and then now the credit sales has been completed. So now these credit customers are liable to pay us in the future. Okay, some of you may also consider B, but B is not the right option because here we just received an order and we have not executed the order yet. Okay, so just receiving order is not realization. Once we sell this and once it is been delivered to the customer, then your credit transaction or the transaction is complete. In that case we say that this is realized. Question number 2. On the first day of financial period before trading starts, a business owner introduces her personal item to the business consisting of goods costing 5,000. So the owner is investing inventory or the goods into the business before we start our business. So which entry should have been made to record this? This is very simple. So owner is giving inventory, so inventory should be debited, and this is coming from the owner, so it is capital credited. So inventory account debit and capital account credited. Okay, so correct option is B. Number 3. Okay, why might a business adopt a computerized accounting system? So why are we using a computerized accounting system? First one, to ensure that accounting records are free from errors. Number 2, to ensure that accounting records are free from fraud. And number 3, to ensure that accounting records are arithmetically accurate. So why we adapt a computerized accounting system? If I made mistake while writing or while entering the transaction, then there could be error there. Okay, and if the person who is involved in recording the transactions are unfaithful and wants to do fraud in the business, then this can also be not insured by computerized accounting system. But what it can ensure is the arithmetical accuracy, the human error of adding, subtracting, or dividing. So those arithmetical error would not be there. So computerized accounting would eliminate this. So the correct option for question number 3 is D. Okay, only 3. Now let's go to next question, question number 4. So capital income should not be included in your profit calculation, neither the capital expenditure. But what we did out here is capital income we treated as revenue income and capital expenditure we treated as revenue expenditure. So because of this, my income is increased by 5,000 and also expenses also increases by 5,000. So if I do this and if I correct this one, so company had 20,000 profit. Now if I correct capital income, that means it should not be income of the business. So I should subtract this income of 5,000 and capital expenditure of 4,000 treated as revenue expenditure. So it is capital expenditure should not be the expense of business. So I'll add back 4,000 out here. Okay, and if I do that, then my correct answer is 20,000 minus 5,000, 15,000 plus 4,000, 19,000. So 19,000 is our correct profit. So option is B. Okay, next question. Question number 5. The following cost for a business related to a newly purchased machine. Number 1, alterations to the factory building to install the machine. Number 2, payment of insurance for a new machine. Number 3, a final purchase price of the machine agreed with supplier. And number 4, the price of the machine before the discount from the supplier. Which cost would be treated as capital expenditure? So capital expenditures are, we can say, basically expenses to procure capital items, and these are the one-time expense for that particular capital. Okay, like for example, we are purchasing this machinery, so this final price that we agreed to buy from the supplier is a capital expenditure. Okay, but now once we buy this machinery, we need to install it. So installation is a one-time fee that we are paying while we purchase this machinery. So here alteration to the factory building to install the machine is also capital expenditure. Okay, now whereas payment of insurance for a new machine is a revenue expenditure, because we have to pay insurance amount every year. Okay, so we have to insure it every year. So this is a recurring expenditure for the business and not one time expenditure. Okay, and the last one is the price of the machine before discount from the supplier. So this was the markup price or the market price of the product. Now after we discuss with the supplier, we came up with the final price, so we do not consider this price as well. So your correct answer for question number 5 is 1 and 3. So B. Okay, only 1 and 3. Let's go to the next question. Question number 6. Lendro had owned a delivery van for some years and had been depreciated it each year. Okay, how should he record the provision for depreciation? So what should we write provision for depreciation? How do we record the depreciation transaction? It's very simple. Now when it comes to in general ledger, we need to write down how much we are charging for the year. Okay, general ledger in the sense provision for depreciation ledger account. Okay. So there every year we charge depreciation and we transfer it to the provision for depreciation account. So we write down charges for the year. Now in statement of financial position, we write down total depreciation that we have gathered for that particular asset. So it's an accumulated depreciation of the asset. So first one in general ledger, charges for the year. In second one, statement of financial position, accumulated depreciation. And in statement of profit and loss, we write down charges for the year, because the journal entry for depreciation that we charge during the year is depreciation account debit and statement of profit and loss account credit. Okay, or provision for depreciation account debit and statement of profit and loss account credit. So we'll write down that in the general ledger under the provision for depreciation, and also the charges for the year should be reflected in the statement of profit and loss. So your correct answer for this is option C, charges for the year for general ledger, accumulated depreciation for statement of financial position, and charges for the year for statement of profit and loss. Go to question number 7. A business depreciates its motor vehicle at 20% per annum using the straight line method. Depreciation is charged on month by month basis. Okay. So the rate of depreciation is 20% and the method is straight line method, and we are charging month by month basis. That means if the asset is there for 11 months, we'll charge the depreciation only for 11 months. On 30th June in the current financial year, so this financial year on 30th June, a new van was purchased at a cost of 20,000. So we are buying new van, that is on 30th June. So we'll calculate depreciation from 30th June onwards because the depreciation is charged from month to month basis. Okay. Then an old van which cost 18,000, bought at the beginning of the previous year on 1st January. So last financial year on 1st January when we bought this asset, the cost of that asset was 18,000. And now this asset was part exchange for 14,000. So we bought that asset for 18,000 last year. Now we are selling this asset for 14,000 and we are getting a new asset which is 20,000. So the balance was paid by check. So remaining amount of this 20,000, which is 6,000 after part exchanging 14,000 from the old asset, is paid by check. What is the total reduction in the profit for the current financial year ended 31st December as a result of this? Okay, so we need to see what is the amount that we need to write in the statement of profit and loss, whether it will increase the profit, decrease the profit. Basically here they said decrease the profit, so how much will it decrease this year? Okay. And then let's calculate the net book value of old asset. Okay, so asset cost asset cost was 18,000 and this is depreciated in year 1 year 1, which is from January to December. Okay, because question says that it was purchased last year in January. Okay, last year in 1st January. So from 1st January to December last year, we will calculate depreciation, and depreciation is 20%. So 18,000 into 20 divided by 100, and that will give you 3,600. Okay, whereas in year 2 the asset is there only till June, because in the month of 30th June, we are part exchanging it for the new asset. So we use this for 6 months. So we'll calculate depreciation for 6 months only. Okay. So this is 18,000 into 20%. And now whatever we get here into 6 divided by 12. And we are getting 1800. It should be 1800. Sorry. Okay. So 1800, half of the depreciation for this year. So the net book value is cost minus accumulated depreciation. So cost is 18,000 minus accumulated depreciation is 2 years depreciation, which is 12,600. Okay. Now the profit or loss on disposal or part exchange. Profit or loss on part exchange is I'm getting 14,000 for this asset when I part exchange it, but the value of that asset or the net book value of that asset is only 12,600. So that means the profit that we got out here is 1,400. So this is our profit. Okay. Now the last thing that we need to calculate is depreciation of new asset. So new asset cost was 20,000 14,000 from the old asset and 6,000 we paid by check. And in year 2 we are charging depreciation, so 20,000 into 20%. But remember, this was purchased on June, and till the end of the year, which is June to December, is only 6 months. So we'll calculate 6 month depreciation out of 12 months. It's coming 2,000. Okay. Now charges in PL is in second year. First year we don't need. So this is the total amount that we charge. Okay, 18,000 for the old asset and 2,000 for the new asset, so 3,800. And the income in PL in second year is the profit that we got on disposal or in part exchange, which is 1,400. Okay, so this is our expense. Let's say this is our expense red, and then this is our income, which is yellow. So the amount that we write in statement of profit and loss is this minus this. Okay, so expense minus income. So 2,400 as an expense will write. So profit will decrease by 2,400 in my statement of profit and loss. So let's see if we have an option that we have that option. Yes, A, 2,400. So your correct answer is the total profit will reduce by 2,400. Let's go to the next question. Which error is not affect the trial balance? Trial balance, which error would not affect? So it should be any of the 6 errors that we discussed. So error of principal, error of omission, error of commission, compensating error, complete reversal, original entry. So those errors should be there. Okay, so if those errors are there, then it would not affect the trial balance. Let's see. A, posting of 3,000 purchases to a debit of the motor vehicle account. So we purchase for 3,000, it should go in the purchase account, but we wrote it in the motor vehicle account on the debit side. Purchase is a debit balance, motor vehicle account is also debit balance, so this would not affect the trial balance. This error is called error of principal. Okay, so it's a purchase account, but we wrote it in the motor vehicle account. Number B, posting of 3,000 purchased to the credit of the motor vehicle account. So purchase is a debit balance. We put it in the motor vehicle, but if we wrote it on the credit side, then trial balance would not match. Okay, so this would detected by the trial balance. Number C, a posting of 3,000 road tax refund to the debit of the motor vehicle account. Now, if it is a road tax refund, so this is a income. Income is a credit balance. So all the balances of the income should be on the credit side. But we wrote this amount on the debit side of the motor vehicle. So it will also not match the trial balance. Okay, it should be on the credit side, but we wrote it on the debit side. And then the last one, D, posting of 3,000 sales to the debit of the motor vehicle account. Again, a sales is an income, so it should be a credit balance, but we wrote it on the debit side of the motor vehicle, so this would also not match the trial balance. So trial balance can detect this error, and this error. However, this error, it is the purchase the debit balance, and also we transfer it on the debit side of the motor vehicle, so it would not be detected by the trial balance. So correct option is A. Number 9. The total of the trial balance of the business did not agree. A suspense account was opened for the difference. The following error were then discovered. Number 1. The total of the sales journal 16,000 has been posted to the debit of the purchase account. So sales journal means income. We should write this on the credit side, but instead we wrote it on the debit side. Okay, so if I make this here, so sales, I should wrote that I should write that 16,000 here, but instead of that I wrote it in purchase, and then I wrote 1600 here. Okay, so what did this do is, when I wrote suspense account, array suspense account, when I wrote suspense account, then the credit side will have 3200, because I should have written 16,000 on the credit side, but I did not write it here, but instead I wrote it on the opposite side. Now if I had to balance this, first I need to cancel this 16,000 and then write 16,000 on this side. So that's why you have 16,000 or 32,000 on this side because of this error. Okay. Now if we look at second one it says $7,000 had been correctly entered in the rent received account, but had been debited as 7,700 in the cash book. So is a rent received. We correctly wrote 7,000 on the credit side, but while writing it on the debit side, I wrote only 700. Okay, so this is how they did. So this is rent received, and then we wrote 7,000 here, but when it comes to cash book, we wrote only 700. Now if I just look at this one, then the difference is coming on this side, and I'll write down suspense account here, and the suspense account is 6,300. Okay, so now you can see that there are two suspense for two different errors. So one is 32,000 on the credit side and another one is 6,300 on the debit side. Let's see what is the question. Question is asking, after correcting these errors, the suspense account was eliminated and the trial balance total agrees. Which amount appears in the suspense account in the trial balance before corrections were made? Okay, very simple. So what we need to find out is, where do we write down the suspense account and what should be the amount? So we wrote suspense on the debit side, suspense on the credit side. We find the difference, and that difference will be the suspense account balance. So I can see I have more amount here, so it should be on the credit side. So 32,000 minus 3,600. So 25,700 should be in the suspense account, and when I correct these errors, then 32,000 would be subtracted on the credit side of suspense account and 6,300 on the debit side. So ultimately the suspense account balance should match. Okay, so I have 25,700. That is my correct option. So option C. Okay. Okay, last question. A bookkeeper compare a business bank statement with the cash book. Then he updated the cash book and finally prepare a bank reconciliation statement. Why was the bank reconciliation statement prepared? A. To ensure no transaction has been omitted from the cash book. B. To establish the value of unpresented check. C. To explain the difference between the cash book balance and the bank statement balance. D. To find out if any check had been dishonored. Okay, so main purpose why we prepare the bank reconciliation statement is to see why there is a difference between the cash book and the bank statement. Okay, so this answer is C, to explain the difference between the bank cash book balance and the bank statement balance. So when we compare this one, or when we prepare bank reconciliation, we would say because of these reasons the cash book and the bank statements are not matching. Okay, so this is the end of today's video. Hope you understood. And if you are new to this channel, I would like you to please subscribe so that you can get new updates every time.